Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is April 25th, Tuesday. Today we are going to take a look at Archer Daniels Midland. Let's jump right in the video. This is my investing criteria. So whenever I'm looking at a company on a high level to see if it's something I'm interested in investing in, or a company already in my portfolio that I'm just checking up on to see how it's doing, these are kind of what I'm looking at. And then obviously I will get into more of a deep dive. If it's in my portfolio, I just do a deep dive if it's one I'm interested in. If it meets 4 of the 7 criteria here and above, if it's not a financial company, if it's a financial company, I add this one here, and then it must meet 5 of the 8. And then I will do a more deep dive if it meets that criteria. So you can read through these at your leisure. Now, Archer, Daniels, Midland. Well, who are they, right? We don't own farms, but we work with growers, supporting them with personalized services and innovative technologies. We partner with them to develop and enhance sustainable practices and transform their bounty into products for consumers around the globe. So really, they're a processor, right? They're a food processing company. You can read through the rest of this. They have been around a long time, over 120 years, or right around 120 years. Some of their bread and butter, human nutrition. ADM gives you an edge in accelerating innovation, going beyond ingredients to deliver inspired solutions. Starting at the source, we unlock nature and apply technical ingenuity and holistic formulation know-how to fuel winning products, right? Animal nutrition, so they even do animal feed, industrial biosolutions, pet nutrition, right, and services. So this is this would be more farm related. This would be like your dogs or cats at home, right? And services. ADM's leadership in agricultural processing comprises a wide range of services, including global futures, brokers, farmer services, and third-party logistics, with access to one of the most far-reaching transportation networks in the world. So, right, they have their hands in food and food-related processing, everything around that, from helping the farmers to helping put it on your table or in your dog's or animal feeds bowl or pen. And if you want to know more about them, check them out, www.adm.com. Again, been around for 120 years or longer. So they've weathered the storms, downturns, great recessions, 2 world wars, Vietnam War, oil crisis in the 70s, 80s downturns, 90s downturns, dot-com bubble, late 90s, 2000s, the housing crash in 2007, 2008. The recent turmoil we're in now, you name it, every decade we have something going on. So the sky is not falling. The stock market's still around. It made it through all of those. And I'm assuming a company like this who has made it out the other side of all those other issues will probably make it out the other side of this one. Maybe. Now over to the reason we are looking at Archer Daniels Midland Company, ticker ADM, right, out of the consumer staples sector. They were down 6.06% here. Closed out the day at $75.90. I think if you've watched this channel any length of time, you'll know I see something down this amount, 6%, 7%. I am going to take a look at what is going on and see if there may be some value. All right, 52-week range as low as $70.02, as high as $98.28. Definitely closer to that 52-week low, but in all honesty, they could drop a little bit more and head down to that 52-week low. Average volume 2.9. Today's volume was 5.3 million. And a steady sell-off. You can clearly see that sell-off throughout the day. Market cap of 41.63 billion, a beta of 0.8, so less volatile than the overall market, even though they're pretty close to the market, right? 1 being the market, anything above 1 being more volatile, anything under 1 being less volatile. Price to earnings PE ratio is $9.88, so they do have a low PE. Earnings per share, EPS, is sitting at $7.68. That's actually really nice. That's a nice number, healthy number there. Earnings date is April 25th. Their next one, so that was actually today. So that may have been part of the problem, right? Maybe their earnings did not report well. You'd want to look into that if you were interested in buying this company. Forward dividend is $1.80. It is a quarterly payer. We'll see that here in a moment. And a nice dividend yield, 2.23%. Anything really, the market is usually around 1.6, 1.7. So anything above that is nice. I like anything above 3. And for it to be, around the high 1s or low 2s, it needs to be a fast grower. Ex-dividend date is February 8th. The last one was, we actually see over here, they paid out, ex-dividend date February 8th, right? Okay. 1-year target, at least according to Yahoo Finance, $101.42. So they see some potential upside appreciation in the stock price here. Now, obviously, you'd want to get in and do more of a deep dive on this one. Some information I like to look at, statistics. and from my criteria. So if you go in this one I like to look at is dividend yield theory. So you look down here at their under dividends and splits, their 5-year dividend yield average is 2.7, and then compare it to their current, or what they call their forward annual dividend yield, is 2.23. So currently they are potentially overvalued. Basically what the dividend yield theory says is if the 5-year average, the current is higher than the 5-year average, this one is not, it's lower, then it would be potentially undervalued. But since this is lower than its 5-year average, it's potentially overvalued, right? Just the opposite. So this one, most of the ones we've been looking at are potentially undervalued by dividend yield theory. This one is potentially overvalued unless they've cut their dividend recently, which I don't know that they have. But according to dividend yield theory, potentially overvalued right now. Another one I like to get into, if you go into financials, a lot of information there: balance sheet, income statements, free cash flow report. That's the one I'm looking at here. The free cash flow, that's what they pay their dividend out of. So you want growing free cash flow, or at least ensure that the cash flow they have is covers the dividend. I like a payout ratio of 75% or less. So you can see here in 2019, negative free cash flow, 2020, negative free cash flow, 2021, 5.4, 2022, 2.159. So not a great sign on the free cash flow. Not sure if they had some sell-offs here or what's going on, paid off some debt, or what the negatives are about. But even from 21 to 22, they have decreasing free cash flow over time. So that is not a good sign. They are repurchasing stock. That's what this tab here, or this line here shows you. So they are repurchasing stock over time. That's a positive. And this is all brought to you by Yahoo Finance. I'm not affiliated, just one of the sites I like to go to. And I always recommend more than one site. So another one that I like is stockanalysis.com. I am not affiliated with them either, but another one I like to back check the information that I'm looking at is accurate. So same thing, you can get into the statistics, you can look at their forecasts, which is what we're looking at here. And they've had 12 analysts take a look at this. They do call it a consensus buy. Right, so they have a buy rating on this one. They have a low estimate of $85, which it's currently sitting lower than their lowest estimate. So that would be an 11.99% increase in the stock price if it came up to their lowest estimate. Their average estimate of $99.17, that would be a 30.66% increase in the stock price. And if it happened to hit their high, $117, that would be a 54.15% increase in the stock price. All the while, you'd be collecting that 2+% dividend yield. And this average here, that's pretty close to what we saw on Yahoo Finance on the previous page. So that probably is pretty in line with what the analysts are estimating here. So for stock appreciation, looks like it might be a good one where it's at right now. Though like I said, the decrease in free cash flow and the negative free cash flow over the last 5 years is a little concerning. And then another one, get into the statistics, look at what I like to pull out of this. I like to look at return on equity and return on invested capital. That's what ROE is, return on equity, return on invested capital, ROIC. And I'm looking for 10% or and above, or in line with their industrial average. So both of these meet that criteria: 18% return on equity, 14% return on invested capital. Very nice to see that. Now but again, you want to look at the rest of the statistics, get in and look at their financials if you're interested in this. Don't take my word for any of these. I am not a professional here. Now, this is where I would typically show you my position. I do not have a position in Arch & Daniels. It is one that is on my watch list for the right price. I would like it a little lower, and I'll be honest with you, what I'm really waiting for is to see what's going on with their free cash flow. I do not like the fact that it's decreased from 21 to 22, and like I said, the last 5 years, negative free cash flow. That is not a good sign to me. But it is a quarterly payer. They pay out 45 cents per share. They did have a recent dividend increase, right? Back in November, they were paying 40 cents. Here, February 8th, they paid out 45 cents. So if you did buy them now, I believe you would be in line for their next dividend payout. They do have a low payout ratio, very low payout ratio, 20.7%. So a lot of room to increase that dividend over time, pay down debt, buy back shares, which is what they're doing now. So looks like they have a lot of room to grow this dividend, and they do have nice dividend growth at 9.27. I mean, it may be one to throw on the watch list and keep an eye on, see if it comes back down closer to that $70 range, their 52-week low. Maybe it's in the fair value category now. Like I said, the free cash flow bothers me a little bit, but as far as my criteria, it does meet the majority of them, other than the growing free cash flow over the last 5 years, and it does not meet dividend yield theory. So this would be one I would want to do a discount cash flow analysis on, or another metric to try to figure out what the value of the stock should be to see if the $75 range is in fair value right now. Well, that is Archer Daniels Midland. Is it in your portfolio? Let me know what you think of this particular company. Have you ever heard of it before? Do you use some of their products? Are you a farmer out there maybe that uses some of their products? Drop that down below in the comment section. Let me know what you think. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, join me and the vested interest community and hit that subscribe button down below and hit the notification bell so you're notified whenever we post any new videos. We are trying to build a community of like-minded dividend growth investors so we can share our experiences. Chat down in the comment section below. Let me know that I'm not going to catch everything. I do have a day job, a wife and 2 kids, so I do this in my free time. I would like to get to 1,000 subscribers. So again, hit that subscribe button. Help me get to 1,000 and beyond. I want to get to 1,000,000 subscribers really, but that will take some time, and it is all based on you doing all those things. Thumbs up, dropping a comment, all those fun stuff down below. And I do personally read and respond to the comments on the day I post a video. So if you drop a comment down below, and if you have any stocks that you'd like me to cover, any businesses you'd like me to cover on the Stock Pick of the Day series, go ahead and drop those down below, and I'll try to work them in on a day they pull back. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you in the next one. Thanks for stopping by. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk against one and should never invest any amount you're not comfortable losing. Always do your own research and invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.